Hey, good morning, everyone. Marty Missouri here, March 27, 2022, with your quick stock market snapshot, we'll call it. Wednesday, when we did this, it was right here. This is the Wednesday candle. Although it was green, we did it during the session, but I showed you on the 60-minute charts that it was looking pretty bearish on a exceedingly short-term basis. And sure enough, the market gave up what it was gaining on Wednesday and ended up closing lower below that 50% retracement level that I said might be problematic and below the 200-day moving average. However, Thursday, big ramp up, and then again on Friday, market closed nicely higher. So you still have this negative cross where the 50-day dropped below the 200, and you still have a downward sloping 50-day moving average, but you do have a 200-day moving average that's beginning to look bullish again as it's beginning to slope back upward. Now, this level right here again is key. Now, I have to also acknowledge that I thought this would be very key. And I really thought this would be a big struggle. And, it struggled with it for a day or three and then shot right up to this level, that last key Fibonacci retracement level. I say key, these are the highlighted ones that you tend to really pay attention to. This one's the 61.8% retracement from the bottom back up to the all-time high. Now, it also happens to fall right in line with this level right here that was resistance back in here. Then it was support, then fell through there, resistance, up against this now. I'll say it again, probabilities suggest that the market may very well struggle right here with this line. Of course, there's lots of potential news, geopolitics, etc., that could be positive, that would shoot that right through there like a knife through butter. But all things being equal, you would expect the market to struggle right here. Now, again, on this chart, the daily chart, doesn't look so bad. You've got some momentum here in the MACD, although of course, it won't continue to go up forever. So you could say that. You could say that you're struggling here on the RSI. On the hourly chart, and I'm going to run through the same screens I ran through with you on Wednesday. Recall that we had this upward wedge, and I said that that was bearish on a short-term basis because we had these bearish divergences. And sure enough, for the rest of Wednesday and the next few hours, we broke out below, just as this technical pattern would have suggested. But it recovered and moved higher, as I showed you on the daily chart. However, what we really have here, folks, is really nothing more than an extension of a very clear upward sloping wedge pattern. And we really got no help down here on the momentum indicators. In fact, quite the opposite here on the MACD. So if I were a very short-term trader and I went short here, I might have gotten stopped out depending on how tight my stops were here. But this pattern has not improved. Despite Thursday and Friday, on the 60-minute chart, it still says that odds favor pain here on a short-term basis. Whether it's kind of like this and we just keep kind of chopping higher, of course, that remains to be seen. So clients, you're not short-term traders. We don't trade your portfolios, obviously, this way. But a lot of you are looking at this stuff, daily and intraday. And so, therefore, I feel compelled to at least give you what the very short-term technical picture looks like as well. To get more meaningful for our purposes, and we'll close right here like we did on Wednesday, let's take a look at the weekly setup. So when we did this on Wednesday, I was showing you this weekly candle that was green that I showed you, and I'll do that again. I'll show you the 2018 comparison where it was green for a little bit, but then we ended that particular week with a big red candle. That didn't happen this last week, right? We actually closed up, but you do have something going on here, and that is this level right here. I bolded this white line right here. Notice that this was resistance back here in September 21. Then resistance on that week, and then broke through it and found support, lots of support on a weekly basis, and then lots of resistance here. Okay, so folks, this is going to be very interesting coming into next week. Now, like I did last time, let's just quickly run back to 2018. As you can see, back then, it was facing a similar looking setup where we had resistance, then support, then resistance. And in that case, it lost it against this resistance, right? And then we went down here and bottomed out, right, just ahead of Christmas Day. Now, this year's chart, using the comparison, I was comparing this week with this week. That time, it fell further, but it fell further after it tested a key resistance line that went back a few months, like I just showed you. And that's what's happening here as well. What's similar about these two setups, as I suggested on Wednesday, is that in both cases, the Federal Reserve was raising interest rates, tightening monetary policy, and threatening to do more of it. This changed their mind, and they became pretty dovish thereafter. I really think that the market, if you will, air quotes, or players in the market, really don't believe that the Fed, as they didn't here, can stay with that conviction to continue to tighten up on monetary policy. Again, though, the key difference is we did not have inflationary pressures, not even remotely like we do today. So there is a very different narrative relative to inflation and a very different reality relative to inflation right here than there was back here. I also think that folks are afraid to be out of this market if Russia-Ukraine resolves or improves anytime soon. And while it's encouraging, the recent price action, technically speaking, I definitely would not let the pigeons loose just yet. So folks, I'll leave it there. Thank you as always for watching and listening. Talk to you again soon. Bye-bye.